This week is a very big week when it comes to earnings. Some of the most important companies, the largest when it comes to market capitalization, are reporting earnings this week. Here's a chart from Bloomberg, not from me, from Bloomberg, basically talking about the year-over-year change in the earnings, the combined earnings between really five of the largest, and three of these are definitely the largest market caps on publicly traded companies right now. So we have Apple, Microsoft, Alphabet, Amazon, and Meta. It's not Facebook anymore, it's Meta. And what we can see here is kind of a big reason why I believe the S&P 500 is going to have a really difficult time getting back to all-time highs. These five companies represent a quarter of the index. And if their earnings are going to go down, not go up less than they used to, but if their earnings are going to go down, which is what we've seen this whole year, and it's really hard to assume that in the future they're just going to easily start going back higher, then you have to believe that at least a quarter of the index is going to be much more of a drag than you were probably thinking before. And at least in my book, it does make it much more difficult, or a lot more difficult, for the index to rally back to all-time highs when a quarter of the index, at a minimum, at least these five companies, are really headed for some struggles in the near future.